Okay, ICP holders, this is an important one because we had a 4-step recovery plan. Each one of these recovery plans, step 1, 2, 3, and 4, tick, they have been completed. Then we hit the acceleration gap. We talked about that. Limited resistance to the downside, exactly the same to the upside. We knew that $9 was the target. $9 has been hit. The indicators are overextended. We're expecting a pullback. So anyone that's holding ICP, you need to understand that you're at a resistance barrier now until we overcome the $9 mark. Then we're not confirming bullish in the short term. We need a pullback. That creates opportunities. How far are we likely to pull back? Let's dive in. And the trend reversal has been confirmed. ICP has regained control fully for the bulls. Now we're at a resistance barrier. We need to expect that things don't go up in a straight line. Once you're overexhausted, you need to pull back. So we've done this, tick. We've done this, tick. We've done this, tick. And finally, we've done this, tick. We've regained the 200 moving average. We've held that support. We've bounced off that, and then we've pushed up all the way to the $9. We're getting rejected at this $9 mark, and we did say that that was going to be a key resistance. One thing that we can see is our indicators are overbought, 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 overbought. So indicators need to pull back. That means price needs to pull back. We're at a resistance barrier. So we've got 3 levels of resistance. We've got the indicators overbought, and then we've got price action overbought at resistance. So we understand that this is the resistance gap. Remember, clues look left, clues look left. Of course, that's going to be the resistance because that was the previous structure. So remember, structure leaves clues, clues look left, structure leaves clues. That's the main thing. We understood that this was going to be the key barrier, and this is where we were going to expect a pullback. So what we've done is we've stuck our Fibonacci friend, all the way from this swing low all the way to this swing high, and we're looking how far this thing is going to retrace and whether we've got any sticking points at these key levels. So the first one's going to be the 38.2. You've got the 38.2, which is sat at $7.19. This is going to be my first area to come back as support. Now, the way that you understand if something's support is when you come back, price reacts at this level and starts making a build-up of price action. Remember, structure is king. That's what structure is. When you leave a build-up of price action, that means that this area is holding support and you expect a continuation to the upside. Now, if we're pulling back to the 38.2% retracement, which is 38.2%, this big swing here, that's telling us one thing. That's a shallow retracement. And when you get a 38.2% retracement and a build-up of price action, you can expect either a double top or a continuation to try and break through the $9 mark, which is the aim of the game in the short term. So we're looking for the indicators to pull back into an oversold level. We're expected to hold support. And if we lose the 38.2, we've got this, the 61.8% retracement of its previous swing, which is the golden zone. That will push us back into the acceleration gap, but that could be a good support zone. So we're looking for this level, $7.19 in the short term. If we really pull back, we've got the 61.8% retracement at $5.49. Call it $5.50, key psychological round number. You would expect double confluence at this level. You would expect a big build-up of price action at this level, and you would expect this to be a support base if we broken the 38.2. Now, that had pulled us back in the range. Is that a bad thing? Clues look left, clues look left. Now you can see this 61.8, if you just pull it back, you can see that price reacted at this level as resistance, resistance, support. We understand that this level is holding a key area. So we understand that this 61.8% retracement is going to be a strong support base if we lose the 38.2. Now, this thing takes time. We need to pull back. How many candles is it going to take? 1, 2, 3, 4. We don't know how many candles it's going to take. We don't know how volatile the pullback is. But one thing that's happening here is the 200 moving average is curling up towards the 61.8% retracement, which would give you extra support by the time that price action pulled back to this level. The next thing that we're looking for is this faster paced one, 50 period moving average. Once this pushes up and pushes up and pushes up and crosses above the 200 daily moving average, that, my friends, is a golden cross. That, my friends, is a retail indicator. That, my friends, is something that I'm expecting to happen within the next couple of weeks on ICP. So remember, $9, that is a danger point. The only way that that's going to be invalidated is if we break through, come back down and hold this level of support. Not interested unless it's support. Don't buy at resistance. So that's what I'm looking for. ICP to pull back. 38.2% retracement, 61.8% retracement, and that is $5.50 and $7.19. Let me know in the comments what you want me to cover next, because I've got a jam-packed weekend. And guess what? I'm a little bit nervous on this one because I'm the host for Crypto School this week, this Sunday, on Super Sunday. And if you don't know what that is, look at the link on the description below. But I'll tell you some big names, guys. Tyler Hill, Connor Kenny. There's a couple of big names for you. Go and check them out on YouTube, because these are some of the coaches within the school. And we have got so many coaches with so many skills, teaching so many different people. There's one-to-one coaching. We've got Super Sunday. We've got daily calls. We've got a Discord group, which is absolutely jam-packed full of alpha. It is $99 a month to sign up to get all of that alpha, to get all of that education, and for you to make your next step within the crypto space and within the investment space. Link in the description below, and I'll see you in the next one.